The rand trading around R6.90 this morning, so holding on to some of that recent strength that we have seen. We have seen the dollar also retracing some of its gains against the euro.
Good morning, Stephen. Yes, actually yesterday we did see the rand depreciating substantially, especially in the morning trade, but then it continued to gain ground yesterday afternoon. And one of the things that probably did influence the rand was the better actually retail sales that came out for the month of October, and the number indicate that retail sales are still up 6.1% year on year, which is positive for the rand from the GDP differential point of view. And this morning the market, it seems like it's just waiting for the numbers from the quarterly bulletin, which will be out in the next hour or so.
And of course, that quarterly bulletin is also going to give us a snapshot of the South African consumer, particularly as far as consumption expenditure goes, and the current account deficit as well. What's your expectations on that front?
I mean, on the current account side, Stephen, we are expecting the current account to deteriorate a bit in the third quarter, and our forecast there is a deficit of 3.2% of GDP in the third quarter. Remember that in the second quarter, the quarterly or the current account deficit was at 2.5% of GDP, and that deficit will mainly be due to the trade deficit, which will probably just record a small deficit in the third quarter. If you remember, again, in the second quarter, we had the trade recording a surplus of around 13.2 billion. But then, you know, with the current account deficit deteriorating in the third quarter, it won't be such a problem because we're expecting the portfolio inflows that we've seen in the third quarter to adequately finance that current account deficit. And then just moving on to the GDP data. On the GDP data, we are expecting to see what the contribution for household consumption expenditure, net trade and investment had on the third quarter GDP. And on that numbers, we are expecting, of course, household consumption expenditure to moderate slightly in the third quarter, and net trade and with investments, well, we'll see what the numbers say on that.
Interest rate implications of all this, also with the retail sales numbers yesterday, going into our next MPC in January. What do you think the interest rate decision is going to be?
Stephen, for Standard Bank, we're still expecting interest rates to remain on hold, and it looks like the FRA market is still also expecting interest rates to be on hold because they're not pricing in any interest rate cut or any interest rate movements in the next 3 to 6 months. But then it looks like the FRA market is pricing in a hike of about 50% in the next 12 months. So for us, the data doesn't really change our forecast. We still believe that the repo rate will remain on hold at 5.5%, at least for 2011.